All right. Good afternoon. How's everyone doing? Yeah, I know. We're standing between you and lunch. I get it. I understand that. Thank you for making time to come out to the Google Next and making time for this particular session. We're very excited, of course, to have a session focused on, I believe the word is AI. I'm not sure if people have heard about that particular topic in the last 36 hours. It is the answer. Just trying to figure out what the question is. But I'm happy to be joined this afternoon by guests that I don't think need any introduction, but I think it's worth kind of walking down the line over here. Kostas, maybe if you can introduce yourself.
Absolutely. First of all, thanks for the invitation and everybody for the great turnout. Kostas Bekas, I work since 5 years now with Citadel Securities. Together with my org, we take care of the research infrastructure for our quantitative researchers. And we do use massively Google Cloud.
We're thankful for it. Katie.
So good morning, everyone. I'm Katie Myers. I work for Charles Schwab. Hopefully most of you have heard of us. We are a large brokerage, also a bank, with about $9 trillion of client assets under management. And I'm responsible for our data and rep tech areas within technology. And rep tech is our sales, service, marketing, and contact center applications and tools.
Hi, I'm Sunil Coutinho. I'm the CIO of CME Group. For those of you who don't know what CME is where the world comes to manage risk. We have clients in 150 countries. We have about 11 global hubs. Typically, clients are using us to manage risk in commodities and financial assets.
Amazing. So we have making the markets, we have building the markets, and of course managing risk in those markets. What's especially exciting about this particular topic of talking about data and its role in AI in capital markets is, these particular firms and customers we've had the pleasure of working with for the better part of a decade on Google Cloud. And we thought it'd be interesting to give a little bit of flavor of what in these different companies have been working on the platform, and how, as a result of that work, we're now able to capitalize on what AI might represent in those particular domains. Kostas, maybe I'll start on this side with you. First off, thank you very much. If you haven't seen, Citadel was kind enough to do a press release not too long ago, earlier this week, talking a little bit about what you've built on the platform over the last 8 to 9 years in the space of quantitative research in particular. I wondered, Kostas, if in your own words, maybe you could describe what quantitative research means to Citadel, what role it plays in Citadel Securities, and perhaps maybe touch a little bit also on what role you think cloud has played in the development of that platform.
Absolutely. So if I was to describe what Citadel Securities' main, let's say, secret weapon is, this is our people know how to price things very well. Now, how do you do that? In the past, it was done a little bit differently, but in the recent years, it's all about analysis of large-scale data, and that's huge volumes. So you have quantitative researchers that are market experts, they need to employ the latest machine learning and statistics models, which are trained in such a way that they can take into account huge amounts of market data, but also alternative types of data. Basically anything that our quantitative researchers think that can give a better understanding to how the market ticks. Now, the data volume and the compute is enormous. On the other side, however, the human is in the center. So our researchers, they need to have an interactive experience with the system, because ideas are not programmable. We can program analytics, but not the ideas of the head of people, right? So this means basically that when somebody has an idea, then they formulate that idea in a way that we, in our org, make it easy to be expressed, and then to run massively on the cloud. So basically this means that we need a huge elasticity component, and that has been incredibly good for us because we can tune our costs and our delivery time to actually match the idea creation of our people. Now, working with your engineers has been very rewarding because we are able to work on the same level and actually express the technical difficulties that our problems face. And basically we go into a collaboration we describe, and you guys implement what we need on the cloud. So it's been really fantastic.
Fantastic. You know, as I think about that journey, and if I take a step back and think about, it's really about time to value and the productivity gains that are achieved as a result of that, what you've built on Google Cloud. Katie, we've been working together for a number of years. I know Charles Schwab has been particularly focused in the space of data and the platforms that support those technologies. What's that journey been like for Charles Schwab, and what have been some of the interesting outcomes over the last almost decade of work that we've done together as you think about the modernization efforts?
It has been a decade, hasn't it? So we first got our feet wet really with Google, I'd say about 5 years ago, building our intelligent assistant or our client-serving chatbot on Dialogflow. And from there, we decided to move our data platforms to Google Cloud. And there was a trigger for that. Some may remember in late 2019, we announced that we were acquiring one of our largest competitors, TD Ameritrade. And our strategy was we're going to move all of the TDA clients over onto Schwab platforms. And what that meant was all of that data was going to flow to our data platforms and be about twice as large as it was pre-acquisition. And we didn't have the scale for that. We need to do something. And moving to Google to BigQuery is what we decided to do. Concurrently, we started working with Chronicle, did some security data science. And as the data platform migration was wrapping up, we moved on to the operational space. We've done some early moves there, and we're contemplating some more. Outcomes were precisely what we had looked for in terms of elasticity, in terms of scale, the scale that we needed to make two companies one. And a couple big lessons along the way, I think particularly with the data platforms, which was by far the most complicated move. One is moving to the cloud doesn't fix your architecture. So if you have an imperfect architecture, sort of acknowledging those things that are non-standard is really key up front. You need to get in front of them, and it's kind of like the proverbial not working on the engine while you're flying the plane. You can't really do a lot of refactoring or re-architecture while you're migrating to cloud. And then I think the second big learning there was really about putting the band together. So moving to the cloud, unfortunately, is not just us and Google and maybe a systems implementer to help us. You need to bring in all of the ecosystem partners to help there. That's putting the band together. You wouldn't practice with a singer and a keyboardist for several months and then bring in the guitar, the bass, the drums the night before. So we thought it was critical in a learning going forward is making sure all of the constituents are working together and building relationships so that you're all ready to kind of weather the storms. So that's what I would say, Rohit.
Not an easy journey, but certainly one that I think has delivered quite a bit of value to the firm. Sunil, CME Group. I think of this as one of the largest and most complex market environments on the planet, dare I say. You've been at the heart and the center of really thinking through, I would call it a complex equation of interacting with clients and the distribution of information outward as you think about management of risk, but also the internal systems that support how you might make pricing decisions or collateral optimization decisions. We started our journey in earnest many years ago, but really hit a highlight about 2 years ago when we did a strategic partnership. Can you talk a little bit about what the last 2 years have been focused on and what's been exciting for you thus far coming out of that?
Well, you were right. Our first partnership together was to distribute real-time market data on the cloud in a native way. And that's when we realized the power of the platform. So going back 2 years, we set out to achieve 3 things. The first is make it very simple and easy for our market participants to access our markets. That's because we think that the trend of interest in market participation is only going to increase. And the generation of traders and participants that are coming up right now prefer to have simplicity without sacrificing the performance. The second thing we were trying to achieve is a platform that will give insights faster. So today, I don't have to tell you this, but we spend 80% of our time collecting data, cleaning it up, and then 20% of the effort is trying to derive insights out of it, and Kostas was speaking to that. So our goal is to create a platform where Kostas and his team can directly derive insights from that rich source of information that we bring to the table, because we've been in the business for about 175 years, and we've been running markets for a very long time. So we want Kostas and his team to have information to either design an algorithm or to test their portfolios against different scenarios, because we've gone through many different crises over time very quickly. So that's the second objective. And the third one is reducing the cost of innovation. For many financial firms, it's multiple millions of dollars and multiple years to actually launch something new. And many of you are familiar with product committees. So thousands and thousands of them. So our goal is to reduce that cost to hundreds of thousands. So we can be more responsive to our clients and we can deliver this innovation faster. So those are the 3 things that we set out to achieve. So where are we 2 years from now? We are close to having our clearing, regulatory workloads, and business intelligence running live by the end of this year. Subject to regulatory approval, of course, but we're doing quite well. We've achieved a lot of success. We've built a data platform now. So over 26 petabytes of data. It's close to actually 30 petabytes of data. Both raw market data, think of them as instantaneous snapshots of activity, and we call them book depth, snapshots of book depth, 10 deep and further. Scenarios so that you can test your portfolios. So we have all of that now on a single platform. That's no easy feat, given most institutions have many warehouses, so we had to bring it all together. The third thing is, application programming interfaces. It may seem very trivial, but we grew up as an institution offering everything through large platforms such as market clearing. So now we are in the process of disaggregating some of those services and making them available. Think of, Katie and Charles Schwab, they have 40 million clients. So think of 40 million portfolios. So we have to give Charles Schwab the ability to compute margin for those 40 million portfolios, stress test those 40 million portfolios in a very scalable way without Charles Schwab having to make that investment. So we have that API now. So Google gives us cloud scale to do that. We have, close to about 500,000 contracts that are available on any given day for a marketplace to trade. 500,000 contracts are very hard to search. Right? So creating an API, making it very easy for a platform to actually access those contracts without having to download everything and build a local cache. Those are the things we have available right now. And then finally, think of something very simple. In our markets, market participants today reflect expectations of Fed's actions on interest rates. So that's done through our markets. So we publish that, the probability of Fed's action, monetary policy actions. So our goal is to make that available over an API. So think of a bank or an institution that's in the business of providing credit. They can directly integrate with our APIs, so they don't have to worry about using our market data, deriving that insight themselves. We have an API directly available to those calculators. So your mortgage rates, any other lending rates can automatically adjust, of course controlled by you, directly integrated with our API. So that's our goal. So our goal is to, create more such services. Think of the price of wheat, price of gas at your pump, your mortgage rates. So those are the ideas that we continue to deliver in the next few years.
Incredible. It's fascinating to me that all three stories are really underpinned by this notion of trying to address the data problem as a foundational layer for the capabilities you're trying to do. Whether it was talking about the size and scale of how you might think about quantitative research, to getting faster time to value and insights on the data platform that might be represented at Charles Schwab, all the way out to thinking through automated and simplicity in interaction with your endpoint clients to drive, again, efficiencies, be it from margin calculations all the way out to price discovery. A lot of the time, I would say, has been focused on ensuring that these data platforms are ready and modernized in a way to handle those type of capabilities. I wonder if we can switch now to a little bit more into what that has enabled the firms to think about moving forward. So we've seen, I would argue, one of the most rapid advancements in machine learning and AI technologies, and I would say really highlighted over the last 24 months with the introduction of new capabilities, namely called LLMs and generative AI. We've all got questions about how these technologies will play a role moving forward and where really is there productive value being generated in the near term today and perhaps maybe where we might find some value looking further out in the time horizon. Kostas, you're no stranger to this space. You've got a significant amount of research and background in the space of machine learning. And of course, financial services is no stranger to leveraging these technologies for differentiation. I wonder if you can offer some commentary around how you've thought about the applicability of not only the advancements in machine learning type patterns, but also perhaps the applicability of these next generational capabilities like generative AI or AI platforms in the scope of how you think about the world at Citadel Securities.
Yes, I think you have a good point. We are no strangers in computational mathematics, especially computational data analytics. The term AI is a very heavy term right now, but essentially it's computational learning. So this means that we're trying to find patterns into the data, and you try to do that in a couple of manners. The first manner is you try to do it in an unsupervised fashion. This means try to find general patterns, and I don't tell you which these patterns are, just try to find something interesting. That's number one. Number two is you have some ideas, and you want to create a model of reality, essentially. And then you say, well, let's look what happened in the past. Try to model some of what I think are key constituents and combine them in such a way that I can predict the past. Then you have a good idea that you can predict the future. Of course, people will tell you prediction is very difficult, especially if it's about the future, right? So what does this mean? This means that, and I'll go into the specificity of that, this means that this prediction cannot be very steady, let's say. So you have to work on it all the time. You have to change it all the time. And you have to update it all the time. And you have to, because the markets change all the time. So what does this mean? Computationally, this means that the data changes, the compute changes, the idea changes, and you repeat that multiple times. And you don't do that in a way that is, let's say, only or fully organized, but you let the people actually drive this, the quantitative researchers. So the way that we see artificial intelligence and computational learning is essentially a tool, and AI has always been a tool in this respect. It's not there to replace the brains of our people, it's there to enhance the brains of our people. And what we've seen is that if you do it carefully, if you do it properly, if you're really concentrated on cost, on scale, and if you are really not just a believer, but a practitioner that actually measures impact, this can be incredibly useful tools that can actually keep you at the forefront. Now, to go all the way with this in quantitative research, you will see, for instance, that in my team, I have to have people that are experts in distributed systems, experts in file systems, experts in operating systems, cloud experts, computational mathematicians, machine learning people, it's a full thing, all the way. And that's what also we like to see on the other side from you guys, that we had a good partnership in that direction. We were able to find our compass in the other side. So, even though AI is not new, we do have the compute capacity today in order to make it really work and actually produce something very strong in our business, but also I think for society. On the other side, we have to be very wary of keeping its cost down and actually putting it always with its feet on the ground.
Yeah, the cost economics of this is where I think things have become very interesting, because there's a notion of having to experiment with these new technologies to understand where the value might be, but also doing so in a way that when value is discovered, you're able to quickly scale in a cost-effective manner. One of the themes we saw at the conference throughout was this notion of agents. You have developer agents, you have assistive agents, that are leveraging these technologies to provide those value in those channels. Katie, I know we've spent quite a bit of time thinking through, with the data platform, what customer experience might look like in the future, and also what services might need to be curated and how they get curated to those endpoint clients. Could you touch a little bit about how you've been thinking about, again, machine learning playing a role in this, but also maybe perhaps a little bit of your point of view on generative capabilities and their applicability in your world?
Sure, Rohit. So one way that we're a little different from Citadel, from CME, is that Schwab does have many end customers. I think you gave the number, Sunil. And our anchor as a company is that we do everything through our clients' eyes. So when we think about AI, when we think about Gen AI, for us the focus is improving the client experience. Efficiency is important, but client experience is paramount. And so for us, that kind of ranges from making sure that we have quicker, better, more comprehensive answers in the hands of our employee call center reps and our automated service assistant, to making sure that our advisors are better prepared and more informed for client meetings, making sure that we're protecting our clients' assets to the pinnacle of our capability and getting in front of bad actors, and then making sure that we have the best-in-class platforms and offerings. So we have an acclaimed trader platform called Thinkorswim, and that has AI-driven research capabilities. We have an investing capability called Thematic Investing, and behind that we have NLP-driven basically research to look at what equities align with what investment themes, so that we can get the right stocks in the right hands there. And maybe the last thing I would comment, Rohit, is I mentioned when we introduced that I have sort of an unusual coupling in my team. We have data and our rep tools and applications together. It's just a happenstance thing, but it's having some really interesting benefits as we think about and start to move towards Gen AI, because we have the same teams that do the data and the AI ML implementation and activation to our customer service representatives under the same umbrella. They're used to working together. They know each other's system landscapes. And what we're starting to see there is that's going to bring us some ease and kind of lessen the friction in activating these things out to our representatives and ultimately for our clients. So we're pretty excited about that.
Amazing. It's fascinating to me the difference that these use cases can have when the world is more about, again, through the client's eyes. And 40 million clients and strong and growing is no trivial task to service. Sunil, part of the journey with CME or on the data platform, initially, as you said, started with distribution. And one of the learnings that I think we had early on was the complexity of data to be represented with cloud-based technologies was a feat to be crossed. Now that we're on the other side of that equation, what is your take on how venues like the CME are thinking about these next generation technologies and the applicability in your particular space?
I think Kostas covered a little bit about the discipline of AI. It's not new to financial services. It's not novel because our participants are continuously assessing data to figure out patterns and then to look at those, opportunities for economic rents, and then the focus is to try and capture that. Some people use the term alpha for that, right? So, and the important thing is to try and limit your losses or your risks while going after that alpha. If you see the evolution, deep learning was a big step forward. In that area, because one thing that is probably characteristic of financial services is that our markets are moving very fast. The risk is evolving very fast. So it is not a stationary distribution. So, these patterns are not stable over time. They are continuously evolving. There can also be periods of time where it completely shifts. So you can, look at what happened during the pandemic in 2020. Correlation between markets that were never correlated in the same way increased dramatically because, the governments were shutting down economies. So you would naturally see correlations go up. Those are very rare events, right? So that's one of the reasons why, financial services industry is a little bit cautious on using something like generative AI for trading or for generating alpha or for risk management. So then the question is, where do we start using these new technologies? I spoke a little bit about risk factors. So the way we reduce the dimensionality, because you have lots of data, just think about 2 billion events a day. So how do you take that large amount of information and figure out signals? So from a risk perspective, I'll give you one example, is to identify risk factors. So there could be 3, 4, or 5 risk factors. Those risk factors, or think of them as coefficients that drive a certain outcome. So we model those coefficients and want to know how they will evolve over time in different scenarios. And those scenarios are what we use to test our portfolios. So the promise of this technology is to see if we can synthetically generate the evolution of these scenarios, right? Because most of it is by modeling different regimes, stagflation, the period in 1980s, maybe now pandemic. If you model it, then you need to generate these risk factors in a very consistent way with zero arbitrage. That's the idea. So that's where we will see a greater use of this technology. We at CME, what we are focused on is 2 areas. I think Katie covered one aspect of it, which is intelligent search. So essentially using this technology and using vast amounts of information, our context, using our queries, binding them together, and then building an intelligent machine to actually try and give that information as quickly as possible to clients. Imagine 150 clients. You can't build 150 versions of your website or knowledge engine. You just have one version. So how to build an intelligent search engine that can actually meet the needs of different clients from different geographies in a consistent way, in the most optimal way for that specific client. So that's one area. The second is, Gemini Code Assist. So we've seen great promise from this technology. Our goal is to maximize developers' time towards building features and meeting client needs versus building infrastructure. So as Kostas was pointing out, today our teams are building all levels of the stack. So the way we are going with Google is we want to work with Google, partner with Google, so that our engineers are focused on the highest levels of the stack that gives us the greatest value in the shortest amount of time. So that's where we see Gen AI really helping us.
Yeah, interesting. On the developer assist piece of this, I've always seen this as two different problem statements, one being about ensuring that there is a level playing field with languages or coding paradigms so that everyone can program in a standardized manner. I have to believe there's also a notion around legacy code or legacy systems and the ability to understand those systems moving forward. Katie, I wonder, are there active projects in your space that you're thinking about as it relates to developer productivity or application stack design in these technologies, or do you see that as something that's further out in the time horizon? How do you think about this?
We're starting to look at it. So if our first priority is client experiences, I would say our next priority is employee experiences, which goes with productivity, and how can we do more on a day-to-day basis, and also potentially take the more tedious parts out of the jobs that we don't really care for, and that's something we're just starting to look at, Rohit.
Great. Kostas, again, in the sense of quantitative research or in the world of securities, where do you see these technologies playing a role? Is it in the efficiency of something? Is it in the search or as Sunil laid out, intelligent search? So ingestion of knowledge in a different way. How do you juxtaposing this in your environment?
Well, definitely getting information out of general knowledge and using that in order to model the markets, to model the world in general, is very useful. There is, give you an idea, there is something like 1.5 trillion PDF documents created every year on the planet.
1.5 trillion.
Yeah, it's a huge number. If you look at scientific papers, there's something like 3 million scientific papers every year. Who's going to read all of that? Right, so it's impossible. I mean, we have fallen victims of our own success. We are generating so much knowledge today that we definitely need a technology that's going to be able to come in, take it out, systematize it, compare it, find outliers, and then present it to humans so that humans in the end will make the final decision. Now, on the other side, in our world, we have there is something that's very difficult, which is a very small signal to noise ratio. So it's like trying to find a needle in the haystack, right? So this means that it's in order to solve a difficult problem, what you do, like finding the needle in the haystack, you try to constrain the problem. Okay? But when you constrain the problem, won't be too mathematical, but I will tell you, when you constrain the problem, it's easier to solve it. Actually, it's easier to find a local minimum, like a solution. It's very difficult to find the better solution. So the less constrained the problem, the more you are increasing your probabilities to find a better solution, a better alpha, for instance. Okay, so now using the latest technologies in AI can actually help you explore the space better without constraints. So that's what you can do. The human brain models the universe. AI, computational learning, parameterizes it, and you go to search of what happens. And the synergy of these two is actually bringing us further. That's what we see in our business. That's what we see. My previous life, I worked a lot in AI for chemistry, physics, materials. In that respect, we see also major advances there. Look at pharmaceuticals, what's happening there, for instance. Still, the volume of the data and the compute is so big, and the uses are so large, that we have to be very cautious how we use this technology. Because if you're not careful, the purpose will be defeated. We will lose money instead of making it. So I cannot be more serious on that one.
Selfishly, as a cloud provider, I would say please use more and experiment more. But clearly,
we use more because we make more.
Just experiment more. It's great. Look, it's been fascinating to hear this conversation. Ranging from the notion that these technologies are going to help us understand the world far quicker and search through information much quicker. Those are the key things I've kind of heard, at least so far, in information discovery. We've also heard a little bit from what Sunil and Katie, you were talking about, client experience on one end and internal employee experience on the other end are areas that you're likely going to see value moving forward, especially as we start to simplify the development of applications and the code and the languages that go along with that. These LLM-based agents can play a very significant role in that particular space. With 8 minutes left, I wonder if we can have, hopefully not an entirely provocative question. All of you have spent many, many years working with cloud technology, and in particular, we've been thankful with Google Cloud. What's been one of the most surprising things along that journey for you thus far? And if you had to make a non-sensitive, non-disclosure related bet and or prediction looking out the next 5 years, where does your mind go? What is it that you think will be possible in 5 years' time from now? Maybe, Sunil, I'll come to you first on this one.
I was hoping you'll come to me last. I can build on
penalty of eye contact.
Yes. So, look, what was surprising is that when you embark on this digital transformation journey, you think it's a technology problem, but it's mostly a people problem. So that's a great realization that we had. Changing the way we work. So typically in large organizations that have been around for a very long time, we are organized around projects, around activities that you do versus products. So that was a big surprise for us, and we have adapted. So and the payoff is good. So we are learning a lot. Our business is benefiting a lot. So that I feel is the surprise. It's non-technical, but it's important. The prediction, I'm not very good at predicting things. If I was, I wouldn't be a CIO. I'd be trading for Citadel, probably. But I would say that what we are likely to see with focus on insights, focus on intelligence, is a greater adoption of cloud. There will be an acceleration, I feel. And the challenge that we have to solve is not everybody is on the same cloud platform. So interoperating the different cloud platforms so we can take advantage of the capabilities that we are bringing. So one of our challenges is to make sure that all of our clients can take advantage of the analytics and the platform that we are building, and not contemplating a big investment in a different cloud provider just as a barrier to use that. So.
Excellent. So the most surprising thing was it's not technology, it's the people. Is that feedback for this particular? No, I'm just kidding. Thank you. Katie, how about yourself? What was the most surprising aspect of the journey over the last number of years that we've worked together? And What would be an interesting prediction for you moving forward?
All right. Well, starting with the Google experience, I would say the nature of the partnership has been interesting. You know, you guys did not hand us a technology and do a transaction, and we encounter that a lot. I feel like Google really took the time to understand our business objectives and our key success factors and was committed to that. So in moving our data platform, our number one objective was speed. We were bringing these clients over onto our system from TDA, and the platform had to be there. And it was kind of remarkable to me the degree to which Google was able to jump in anytime we encountered an obstacle and either evolve product or come up with a stopgap. So I would say the most surprising part was the speed with which you guys did that, the speed that you could enhance your product or craft some very, very creative workarounds. So we thank you for your urgency and your partnership on that. In terms of predictions, I think we all know we're on a wild technology ride right now. What I'm not sure everybody realizes is that we are probably also on the risk management journey of our lives right now with Gen AI. And I would predict we're going to be hearing more about and talking more about how we minimize the risk of these things, because we aren't going to be able to eliminate it, and what our tolerances are going to be. What's interesting to me is what is going to be sort of the anthropological journey that goes along with this. We've seen so far, let's take robotic surgery, driverless cars. Society has a lot less tolerance for error from a machine than they do from a human. But if it's much lower, where is that going to go? So I'm staying tuned.
Pretty excited to see where all that kind of lands, especially with driverless cars becoming a bit more mainstream. Kostas, how's the journey been for you, and what might be your bold prediction moving forward?
Well, we have to look at things calmly. Is cloud computing the natural or the unnatural way of doing computing? I will argue that this is the natural way of doing computing. And if for people that like computer science archaeology, I'll tell you that the first computers we came out, they were cloud type of computers. They were, what do I mean? They were shared resources. Of course, the sharing was a little bit more manual, not automated, but it was the notion that you have centralized compute, and people were going to that compute, and they were using that compute in turns. That's why we invented time sharing and all of these things. That's why Unix came out. That's the Linux and so forth. Now, so what changed? What changed is that in the 80s and the 90s, the computing, from being very scientifically centered, right? You design buildings, cars, this, that, whatever, would still remain, went also into everyday lives of the people, right? So suddenly you can do your own typing. You have Word, you have documents, you have all of that stuff. So it was very natural from an economical standpoint to come to you and to be personal, because it was much cheaper in this respect. Of course, however, we still had supercomputers, data centers for that type of compute. Now we go back full circle. The advent of broadband, sensors, and everything has actually put us full circle to decentralize compute again, and to bring it in a way that becomes far, far, far cheaper. And just think about it. We can consume now compute on our phones, on our TVs, or everywhere, thanks to decentralized resources. So that is the natural way of doing things. And I think also, just 10 seconds, I think also that AI is again the natural revolution. Humans have been building tools to make us stronger, faster, right? But also we have been building tools to enhance our brain. That's why we invented books. That's why we invented books, typing. That's why we invented computers, calculators. There's nothing strange for this. This is just the next step. So I think we're in for a hell of a ride, and I'm so happy that I'm alive and try to remain alive to just witness it.
I'm happy you're alive as well, my friend. Well, look, it's been a humbling and fantastic conversation. I just wanted to give a huge thank you for making time for this, and maybe just a quick round of applause as we close out. Thank you for everyone for making time for this. We will be concluding our session at this point, and we'll be available for any questions out in the corridors. Thank you so much.
Thanks, everybody.